fly better. Thank you.
And it's 10 a.m. right here in Lagos, Nigeria. It's the second trading day of this week, and investors are expecting inflation numbers for January. That's the rebate figures. We're all holding our breath, waiting for those numbers. But let's get to the top stories that set your agenda now, starting with oil prices. Brent crude, that paused in early trading today after gaining in the previous session. Brent crude futures there flat, 0.09% down, $75.50 a barrel. WTI on the flip side, even though this is what played out last week, but in a different way, Brent was up for the week last week, but WTI was down. But today we're seeing Brent down marginally. WTI crude 0.47% up, $71.21 a barrel. Let's get a check on the FX market now. The dollar holiday kicked off the week, leading to a relatively calm market. However, the Central Bank of Nigeria was active as a seller, with foreign portfolio investors and other market participants also involved. Despite a quiet trading session, NAFEX rate, we see that gained about 0.18%, 1,513 naira to close yesterday. But the CBN rates, that was flat, 0.07% down, and we see 1,508 naira. That's for the NFEM close yesterday. And we have some data from the Manufacturers Association of Nigeria. We see business confidence. We saw a slight uptick there in the fourth quarter of 2024. According to the Association of Nigeria, the Manufacturers CEO's Confidence Index, that rose by 0.5 points to 50.7 points, up from 50.2 points in the previous quarter. That's Q3. Though still lower than the 51.8% recorded in the fourth quarter of 2023. We'll drill down on major factors influencing manufacturers' confidence in Nigeria. To other news now, the 38th session of the African Union Summit in Addis Ababa, Ethiopia, may have come and gone, but some of the decisions taken at the event, that continues to resonate. Participants at the event say there's an urgent need to activate Africa's regional value chains to drive economic growth and prosperity. Take a listen.
It's a gathering of presidents, ministers, heads of international agencies, governors, and members of the African business community. It's the Africa Business Forum 2025, and the focus is on how to activate regional value chains for the economic growth and prosperity of the continent. The Director General of the World Trade Organization also challenges participants.
If you want to change and have us produce and consume here, we've got to be the change we want. You know, we have to stop buying things from elsewhere. We send 80% of our cotton outside. We can transform it here, and all of us can wear beautiful clothes. Even suits can be made. I'm challenging everyone. If we want to grow, we have to. Wow.
For the Minister of Industry, Trade and Investment, Nigeria is on the right track.
The Secretary General, when he was speaking on the panel, charged ministers of trade to encourage their principles on the agriculture value chain to make sure that agricultural products can move across the seamlessly. But you know, coming from yesterday, as Nigeria became co-digital trade champion, joining South Africa and Kenya, but really President Tinubu got a commendation, the only one, for leading on the digital value chain across Africa. So we're very excited about that.
The governor of Oyo State highlights the role of subnationals in this regard.
Yes, you can talk as you wish at the national level, but the implementation will still have to devolve to the subnational. So basically what I'm trying to preach here is to see subnationals as the enablers, for what we're trying to do.
As the 38th African Union Summit draws to an end, government officials are emphasizing some of the key decisions taken by Nigeria.
It's very important for Nigeria in particular. The domestic reforms of President Bola Ahmed Tinubu is taken to now more of an international stage. It's for all of us in Africa, and it's very important that not only are we thinking about issues of security or strife in Africa, we also think about economic development.
If you look at Darfur, Nigeria is one of the main drivers in the Peace and Security Council that has stood firm to say that the two sides have to be brought together, and Nigeria is already talking to both sides. With regards to Eastern Congo, there also Nigeria has played a very significant role.
There is a strong belief that the new leadership of the African Union and the African Union Commission will lead the necessary reforms for the development of the continent. From Addis Ababa, Lanre Lasisi, Channels Television News.
All right, now let's go back to that data from the Manufacturers Association of Nigeria, showing a slight uptick in business confidence there for manufacturers. That's for 2024 Q4. Joining us to unpack this, we have Mr. Segun Ajayi-Kade, the Director General, Manufacturers Association of Nigeria. Great to have you on the show. Good morning.
Thank you for having me. Good morning.
Yes, last time I saw you, I think that was 2024. Happy New Year. I guess, at this time. So we're seeing an uptick in manufacturers' confidence index, and that's Q4 2024. That's where we have all the dirty December. That's where we have festivity spending. So I guess this was expected.
Yes, certainly. You are very right. What has happened is that there's usually an upsurge in consumer purchases around that time because it's a festive period, and probably a lot of people will have made savings. It's time to maybe visit the village, make some purchases, have families and friends around. And so it naturally reflected on the perception of manufacturers and the expectations that, yes, we are going to make higher sales, and it did happen, though marginally. That's why you notice that the confidence of manufacturers were boosted by the 0.5% that we saw. Even though in previous years, when we didn't have this kind of macroeconomic environment, we did have higher upticks in terms of MCCI during this period.
And, looking at, let's compare now to other, festive seasons. How does this one, the fourth quarter of 2024, how does that compare to, say, 2023, fourth quarter, and the previous one?
No, I mean, it was marginal. Even though there was a naira squeeze at some point, we did notice, I think, more than 2 percentage points in terms of the increase that we've had. And we actually saw this uptick, little as it is, as a surprise because our warehouses are still full. So what this means is that there was just a depletion in it, and also that manufacturers felt that, okay, we are entering a period where we are having more purchases. We are having a period where expectations that government will improve on the stability, relative stability that we've had. So I think that was what was responsible for the marginal increase. But compared to what we've had before, I mean, this is low when you consider the increase in activities during the festive periods.
And, despite the uptick in confidence, some indicators remained below that 50-point, threshold, which, signifies contraction. What were the primary challenges affecting them?
Okay, so I think we continue to have a persistent increase in the interest rate. I mean, that's very, very significant for us. And electricity costs remain high. There are even talks that it may go much higher. Insecurity, though it has abated in some ways, but still remains a major challenge affecting logistics. We've also had the fact that the expectations of manufacturers that the tax bills before the National Assembly will be speedily passed because of the positive impact it will have on business. That didn't happen towards the end of last year. And we continued to borrow at rates that are quite unsustainable. I mean, inflation also remained high. So all of those have not left us in any way better than the previous quarters in the year. So, like we said, you can only just attribute this uptick to the festive period. During the Yuletide, you naturally expect economic activities to be on the high. So, but all those macroeconomic factors that have constituted binding constraints to the growth of the manufacturing sector persisted.
Right, and you did mention interest rates there, and we're having the first rate-setting meeting for 2025. That's starting tomorrow. We should get a decision on Thursday. We're also expecting inflation numbers. That should be out at some point, and definitely that's going to shape the next decision. That's rate-setting meeting in Nigeria. If you look at the global scene, we've seen the U.S. They are shifting stance. From the rate cuts we had, in 2024. Now we're seeing pauses in the U.S. and who knows, maybe a hike might come soon with the way it's going. So what do you want to see at the first rate-setting meeting in Nigeria? Do you want to see a hold, or you don't mind another hike?
No, certainly not another hike. I mean, we are looking forward to a pause, if not a deceleration. We should pause it at this moment, because we have indicated in the past that we needed to do an impact assessment on productivity with the hike. I understand the economics that you need to continue to move upwards the interest rate for you to curb inflation. But we have done this for, I think, more than 24 months now, and we have seen that it has not kept inflation down. And we know that it is food inflation that is driving this, and principally responsible is also insecurity and post-harvest losses and so on. But we know that you need a rethink. You need to do an impact assessment for you to know how you should manage it. And I think most experts have seen that a pause on the increase is what is needed at this time, and that's the expectation, so that we'll be able to incentivize productivity. There's no doubt that it is only when when your production cost goes lower that you'll be able to sell at prices that will be more affordable and that will not spoil inflation. So I believe that there has to be a rethink. We do not expect any hike, and we expect that the federal government will take adequate steps to achieve its 15% inflation target for the year. I mean, the way to do it is not to continue to do what we have been doing that has not helped majorly.
So how would you describe hiring in the fourth quarter of 2024? Were manufacturers, were they keen on expanding their labor force?
No, not at all. I mean, like we said, the manufacturing is actually not the business of making products, but is selling it. Because it gets to a stage where what you have produced becomes a burden to you. You now need to hire warehouses to keep them. And you need now to even sell sometimes below the cost of production so that you do not lose it to expiry. So what we are having is a situation where we are cutting back on the number of shifts that will run. Most manufacturers now run just between 8 o'clock and 3 o'clock. You don't see them running 3 shifts any longer, because it's not possible for you to even sell adequately what you have produced. So I think that hiring is not looking up in any way. And I believe that the ambition of Mr. President to employ more than 2.5, to ensure that 2.5 million jobs are created, has to address these binding constraints that we have mentioned, that is limiting hiring, particularly in the manufacturing sector. There's no doubt that apart from government, manufacturing remains the biggest employer of labor. And I believe that a lot of effort should be made to remove those constraints that have limited the capacity of the sector to deliver on jobs.
Right, and talking about manufacturers' confidence, we also have to take into consideration consumer confidence. We're looking at a battered consumer with, hikes all over the place at this point. So are you confident consumers might, gather some kind of confidence in 2025? And what kind of sacrifices do you think manufacturers can still make, for the average consumer this year?
So I think the economic factors has even forced us to make sacrifice, because we are competing not only amongst ourselves, but with imported products. And you also know how the influx of products from low-cost environments have competed with us unfairly in the marketplace. Not to mention the issue of smuggling and counterfeiting that we've not been able to deal with effectively. So manufacturers are already existing on very low margins. And so what is required is for us to ensure that we take measures to improve the purchasing power of the average Nigerian. I was saddened when I heard, I think it was over the weekend, that some states are even yet to pay the minimum wage. I mean, this is sad. I believe that we should be able to put money in the hands of Nigerians so that they will be able to buy. A situation where states are still paying 30,000 and have not effectively signed on to the 70,000 minimum wage, which, by the way, is obviously inadequate. I mean, cause for a lot of concern. So I believe that manufacturers are reasonable. They are even forced to be reasonable, because we already have more than 1.5, is somewhere between 1.5 and 1.7 trillion naira of unsold inventory across the country. So I wonder what kind of sacrifice we need to make beyond that.
Right. I do hope for a win-win, situation with the manufacturers and consumers in 2025. But, now we have the index for the fourth quarter of 2024. What are you seeing for the first quarter of 2025? Do you think that confidence will somehow, seep into the first quarter?
No, I think manufacturers, we've actually had that conversation, and I think this is a very nice question, because we took to them the joyful news, hopefully, that, look, there's an uptick in your confidence. What are you looking at? No, they said they are not kidding themselves, that they know that it's going to be very, very difficult for you to be able to have a sustained improvement, because the euphoria of the festive period is gone, and so you cannot expect a reenactment. But there are certain steps that could be taken, and I believe for us to be able to sustain this. If we have this pause that we mentioned about the interest, the hike in interest, if we do not have the increase in electricity, which will be very, very unpalatable, it should be unexpected, and I think government should not even allow that to happen in the first instance, because those that are on band A are not getting the services that they are paying for, and we are having even collapse of the national grid now. So the investment in infrastructure is not there. I think we need to start talking of service reflective tariff, not just cost reflective tariff, because we need to interrogate the content of the cost. Then we should also have a situation where the federal government deliberately brings down the rate at which manufacturers borrow. We also need to ensure that the tax bill that is before the National Assembly is speedily passed, so that we can have some relief, we can have some justice in the tax system. I mean, so that we do not continue to operate the way we have operated. I believe if we do some of these things, and of course, we don't in any way bring back the 4% that of FOB levy that the customs is thinking about, and the 15% increase in port charges by NPA. All of these complicate the system, and they limit the capacity of the sector to perform. So we should make sure that we do all of this, and then we can expect that we can continue to sustain the confidence of manufacturers in the first quarter of 2025.
Right. I like that. Service reflective tariff, not just cost reflective. Thank you so much. That's a good way to anchor it there, Mr. Segun Ajayi, as the Director General, Manufacturers Association of Nigeria. Thank you for coming on today.
Thank you for having me.
All right, we'll take a break now. When we come back, inflation expectations, that's for January, and what's playing out in the commodities market. That's in a moment. Just stay with us. All right, let's get a check on the commodities market. Now we have Dr. Ifeoma Nwokolo, who's the manager at Financial Derivatives Company. And she's joining me right here in the studio. It's great to have you. Good morning.
Good morning, laddie.
Yeah, so I don't know about you, but I guess I'm holding my breath now, waiting for the rebased numbers. That's for inflation numbers for January. We have some numbers flying around
exactly
at the moment. Some are saying 24%, different numbers. What are you seeing?
Okay, I think the delay in the release of the data is, I think this is the first time this data will be released.
Right. I'm used to it coming 15th.
Ordinarily, it's supposed to be on the 15th,
right,
as usual. But I think they are trying to be cautious this time. So trying to avoid glitches, backlash from the public. But from the unofficial data we are seeing flying around, we have 24.48 as inflation number. So let's assume this comes out to be true, official. So it means inflation has declined by almost more than 10%.
Wow.
From where we're coming from. We have 34.8%. So what does it mean? This simply means that it could be true because, one, methodology has changed. Two, commodities, weight of the commodities in the basket has changed. Let's take, for instance, the weight of food. So
there's no way with all of these changes, the inflation numbers could come out higher? There's no way?
Of course, no. It's not going to come out higher. It's not going to come out higher. Okay, the trend, we know it's going to be low. Rebasing the basket means all of the weight in the basket are going to change. And I take food, for instance. Before now, the weight of food was 50.18. And now it is 40.1. That is a sharp decline of over 10%. And looking at Nigeria, food is the major culprit of inflation. So if food inflation could decline by, the weight could decline by 10%, there's likelihood. And look at this telecom tariff hike. It has remained stable for years. So using 2014 as a base year, that time the hike, we don't have a telecom hike.
Right.
So this will not be reflected in that. So it's definitely going to decline. But the magnitude, we don't know. All these data flying around are unofficial. And following our own survey and data-driven results using the old methodology, we saw that inflation is likely going to decline in January. Okay? So the trend...
So if we're using the old methodology, we'd see a decline?
Of course. We saw a decline of about 1.45% from what it used to be. So we got about 33.35%.
All right, so you did mention, the tariff hike, with the telcos. That's definitely not going to be reflective.
Of course.
And we're supposed to do this every 5 years.
Yes.
Or 10, depending.
5 years.
5 years mostly, right? Okay, so what do you think should be the next move, after we get this data, this current one? Should we be thinking of, doing some kind of mini update, for this tariff hike and all of that?
Okay, so what we are going to see after now, this is the first time this data will be released. So after now, subsequently, we begin to see the true picture of what the data is going to look like, because all other factors are going to come in. So let's not forget that this is also buoyed by some factors. You see petrol price come down. You see diesel price come down. You see CBN intervention. Exchange rate has been stable for quite some time, and we have seen an appreciation of 4 to 5% in Naira between December and now. And also another major factor is consumer. They are restricting their consumption because of income
constraints.
Right, because if you don't have money, what are you doing, consuming that much?
So you are going to see, I also saw that prices of commodities came down in January. Prices of commodities
that should be a nice combination.
Yeah.
If I say so, because, okay, we're seeing demand destruction.
Of course.
And we're seeing the prices, coming down,
yeah.
On their own. So I guess that's good news somewhat, for inflation, even though it seems like some bad news.
Of course, it's good news.
If consumers are not able to consume as they want,
exactly.
then, that's not positive.
At this point, it's a good news. But even though we are seeing, let me say, the data is unofficial, 10% decline. Commodity prices have not declined by 10% in the market. That's what we see. So this is going to help to at least drive MPC meeting, because we are seeing falling inflation, even with the old methodology and the new methodology.
Do you think
it's finally released?
Do you think, since this is a new methodology at this point, should the MPC kind of like hold on, when it comes to either hiking or cutting? And do you think the best move for now, so we understand this new methodology and the data we're getting, just hold the rates? Is that a better move?
Exactly what they are going to do. That's the best move right now, because they want to hold the rates. There's no need for cutting, in a hurry to cut. There's no need for hiking. Inflation is falling. You see other factors that will be considered. CBN has been doing so well, intervening in the FX market. Look at the FX market, it's stable for some time now. Naira is appreciating and all the rest. Prices of PMS is coming down. So based on this, I think they will hold to wait and see the trend of inflation over the months, because this is a new methodology. And let's not forget that there are confluence of events coming up. We're going to have the Muslim Ramadan. We're going to have Easter in April. So these events are likely going to shoot up commodity prices.
All right, so, definitely we're all waiting for that. I'm sure at some point, hopefully my producer will whisper in my ear that we have the inflation numbers, officially from the MBS, but I'm listening for that. It's not out yet, but let's look at the oil market now. We're seeing this morning marginally down, Brent, WTI on the flip side. That was, for the good there in the green. What do you think is playing out, so far? Is it meeting expectations with what we're seeing with oil prices in this first quarter?
Okay, we're seeing that prices are increased marginally for Brent. And this is due to the underflow of OPEC. OPEC has a kind of restricted the increase of production, and they will further reduce production, according to them, by 1.7 million barrels between now and 2026. And this is because, number one, demand for Brent is beginning to decline. You see, China has shifted their consumption pattern away to cleaner energy.
Right.
So the demand of Brent in China is very weak right now. And some other countries are beginning to produce this crude oil. And it's going to be, have what we call have a financial threat on OPEC members, especially Nigeria, who depend solely on exportation of crude oil. And let's not forget that our budget, crude oil budget, is
that benchmark.
Yes. So we are underwater when it comes to that benchmark.
But also on the flip side, some will say, okay, that's good for domestic prices of fuel. Since the prices in the oil market are going down, then we should enjoy that. Consumers, buying PMS for cheaper. But most of the time, it translates to stable prices, I guess, not really lower prices.
Translate to stable prices, and we're seeing it today. That is why you see prices coming down. of PMS coming down is based on global oil price. So once there is a shift in global oil price, it's definitely going to affect prices of...
But I'm still not satisfied with the amount of drop we see, when oil prices drop and, we compare that with the PMS price drop. I'm still not, maybe it's the Oliver Twist in me, but, definitely I'm hoping for a bigger drop, in PMS prices.
You won't see that bigger drop because there are other factors. Factors such as logistics. You have to move those commodities from wherever you're buying it to where. So all of those commodity prices, and we also filter
have to look at the dollar, the exchange rate,
and the exchange rates and all of that. And this decline, even though it's going to bring a drop in oil price in Nigeria, what happens to our revenue? Because when you are talking about the budget benchmark, a drop in the budget benchmark means we have lesser money in our assets reserve account.
Or maybe we just ramp up production.
So
we sell more if the prices, get lower. What are you seeing in the domestic commodities market so far?
Okay, for the domestic commodity market, we are seeing that prices are mixed. You see prices of commodities that are exchange rate driven. Some of them are flat. Some of them declined because of the stability of Naira, and pass-through effect has actually declined. Then you look at some commodities that are low now. Prices are low because of harvest season. You look at onions, you look at cassava. So you see price of Gary coming down, and a lot of people are like, price of Gary are coming down because the prices of wheat are somewhat stable. It's no news that noodles producer use cassava for. So that's why you're seeing prices of Gary come down, and some prices
I guess that's good news, price of Gary coming down, because I've had some conversation with friends. They say there's no poor man food again. So I guess, Gary prices, coming down, that's nice.
Of course.
Right.
Nice.
So do you see more, going into, do you see some relief for the Nigerian consumer somehow this year?
Yeah, there's going to be relief, but in the medium to long term. Because, as I said earlier, we still have some events that could trigger prices, which is the Muslim Ramadan and the, the Easter period. So prices will reverse then, but some global prices are going to decline. Because if we see a truce between Russia and Ukraine, and this will definitely bring out prices of some commodities like sugar, according to EIU, before the end of the year, because we are beginning to see some geopolitical conversations going on. So there's likelihood that prices of some imported commodities.
Right, and I also keep an eye on the grains, the global grains market too.
Yeah, exactly.
As that plays out. But thank you so much. That was Dr. Ifeoma Nwokolo, Manager, Financial Derivatives Company. Thank you for coming on today.
Thank you for having me, Ladi.
All right, let's see what's played out now in the fixed income market. Joining us for this, we have Mr. Chuka Nwachukwu, is the group head, balance sheet management at United Bank for that's UBA. Great to have you on the show. Good morning.
Morning, Ladi.
Yeah, it's good to see you. So I'm sure you're also holding on for the inflation numbers. That's for the rebase number we're waiting for for January. I'm sure in your circle, all of you are just standing by, waiting for those numbers. What are you expecting?
Well, like you mentioned, the numbers are actually out. I think it's around about 24%, from 34.80. And that's well over 100 basis point drop from where it was before this morning. And so we expect that the market will react, especially the fixed income market. We expect that yield will drop significantly, especially with the auction tomorrow, which is the Treasury bills auction. So we expect to see a huge reaction on the fixed income markets as regards this drop in the inflation figures.
All right, I guess I'm still waiting to hear from the MBS. I've not gotten that info yet, but I'm still waiting, for that. But we saw some contraction in normal yields for the NTB market, about 6 basis points and 4 basis points. What do you think contributed to that?
I didn't get that, please. Can you repeat that question?
Yeah, so looking at the OMO yields, what's been playing out with the OMO yields, with the trading we've seen so far this week?
Okay, so let me start with the liquidity first. Of course, liquidity drives activities on the fixed income market. Liquidity has been pretty tight. We have, between yesterday and today, the market is in a debit of about 800 billion. But there will be a bit of respite this week, especially on Thursday, when we see about 1.4 trillion coming in the place of a maturity from the NTB auction that will be tomorrow, and then as well as coupon payments that will come in about 300 billion. The yield on the fixed income market has gradually declined. We've seen decline, especially on the OMO yield that you talked about. The last OMO auction came out around the 21% levels from 24%, and that's significant drop there, almost a 300 basis point drop. Tomorrow auction, we also saw that the last NTB auction result also dropped by about 80 to 100 basis points. We expect to see further drop in the yield tomorrow. We're looking at around maybe 18.5 and then 19 levels. So with all this, we continue to see decline in yield, especially with the huge liquidity we expect to see in the system this week.
And what is the general buying sentiment across all maturities? What does that indicate about investor confidence in the market?
Yeah, so what it means is that, if yield is dropping, and then of course it means that there's a bullish sentiment, and of course it means that investors are investing heavily, especially as regard the fixed income market and the T-bills, especially the 1 year. So we've seen yield decline over the past 2 months from 22.5 to about 19%, and that's tells you a great deal of investors' confidence in this yield. On the bond side, we also see introduction of a 10-year bond, the 2035 bond. It came out, the result was around 22 levels, and it's currently trading around 20-21% level. So that shows you the huge confidence we still have in the investors still have in our yield, compared to what is obtainable out there, and especially the the major economy out there. We see how our youth and our market is still very attractive compared to what you have there. So any youth between this level to even as low as 14% is still a great deal for investors, and I think that investors' confidence will continue to grow as the economy improves.
All right, now talking about the economy improving, with the rebased data at this point, everyone believes inflation numbers, will be lower, but is it reflecting the true picture, when you compare it with, some of the yields that we're seeing? Do you think this truly, signifies bullish sentiment for our investors' portfolio?
Ladi, when you look at the inflation figures before now at 34%, and then you compare it to the highest yield we had is around 26%. You could see that that isn't it's not good for an average investor, even though yields are too high. So when you have inflation figures that are much higher than your investment figures, then it becomes a problem. And so with this rebasing, don't forget that this is normal economic structure. I think that every economy or every country is actually meant to rebase, every 5 years and 10 years. And so I don't think Nigeria is doing something, different. So with this rebasing, it will actually, bring back a lot of confidence, especially those on the fixed income market. People might, there might be an argument that, look, this isn't where, the true reflection of things. But economic indices don't truly follow what an average man on the street thinks. So there's a reason for rebasing, and then there's also the reason for government to try and tweak and modify some of the economic indices. And I think that as the Fed kicks in, the the market itself will react to it. Like I said, you will see that the fixed income market, for example, will react, positively. We will see yield, drop significantly. And I mean, if inflation figure, don't forget, government said that their target for this year in terms of inflation is 15%. So I think this is at 24% now, not officially confirmed, but I think it's been confirmed in one of these platforms. So 15% with this is looking possible. But then what then happens in terms of investment? So if you have inflation figure at 15% and then you're carrying investment portfolio at 18%, obviously it's a delight for every investor. So for me, it's a win-win situation for the economy and then, of course, for investors.
Right. I guess at this point, investors might finally be beating inflation with these rebased numbers we're seeing in 2025. But we're still waiting for the official statement that's from the NBS on what really played out in January. So you talked about the NTB auction that's coming today. What are you seeing, and what's your advice to investors, that might be looking at this and not deciding yet on pulling the trigger?
So the auction is actually tomorrow. We have over 700 billion that will be on offer. The last auction was roughly last week, where about 670 billion was on offer, and then the same amount was sold. And then, like I said earlier, we saw a significant drop, about 148 basis point drop from 21.8% to 20.32%. And so we still see further drop, especially with this unconfirmed rebasing result we expect to see. Because one, the market is highly liquid in terms of liquidity that is expected. A lot of these maturities, well over 1.1 trillion, will be maturing on Thursday, will be reinvested into the same fixed income space, as well as the coupon payment about 300 billion will be coming into the market again. So all this will further put liquidity pressure on in the market, and that will definitely reflect in the auction tomorrow. So tomorrow I expect to see oversubscription at the auction, and then I also expect to see further drop in yield, maybe between 70 to 121 basis point drop.
Right. I know that there's some people that might be watching us right now and not truly understanding how to invest, in this market. Now they're hearing about the yields, they're hearing about oversubscription expectations, but, break it down, for the layman now that has maybe 50,000 naira or 100,000 naira out there and wants to invest, in this auction. What do they stand to gain?
So, in the fixed income market, let me use treasury bills, for example. We have both primary and secondary market. So this primary market is where, customers through banks, bid directly from the debt management office through CBN, which is, of course, is the, primary banker for the government. So for a layman, if you have 50,000 and you want to invest in treasury bills, of course, with as little as even 10,000, you can invest in treasury bills. So all you need to do is just walk into any of your, walk to your banker to say, look, I intend to invest in treasury bills. You might not go for the secondary auctions, but there are primary auctions, but there are opportunity in the secondary market where you can actually buy up from those who have, who went and won at this primary auction. So you just walk into any of your business office and then they have them, of course, they ask you one or two questions as regard KYC, which is know your customer, just to know your identity and then be sure that, the bank is dealing with the right person. And then they give you probably a form to fill, and then you invest. For now, investing in T-bills, it's good, lucrative. Right. I think 1 year should be around in the secondary market should be around 18%. So, okay. And T-bills are should I use the word now, risk-free? No investment is completely risk-free. At least you're sure of 95% risk-free. So
right.
It's pretty simple, and then it's also a good way to invest and then have your mind at rest rather than chasing this.
Right, and we all need our minds, at rest, in this new year. But thank you so much. It was great having you, Chukanwa Chukwu, Group Head, Balance Sheet Management, UBA. Thank you.
Thank you, Ladi. Thank you very much.
We'll take a breather now. All right, now, definitely, Ini Jomekwa has some news for us. Right now, we've been talking about unofficial numbers, but I guess we have something.
I think it now has an official stamp on it, so it just came in. That's why I have my phone right here. Says that the Statistician General of the Federation, Mr. Adeyemi Adeniro, has announced that the Consumer Price Index, which measures the rate of change in prices of goods and commodities, has declined, Ladi. Your rumor was right, 24.48.
24.48%,
yes,
wow.
Yes, Ladi.
Wow.
So as Chuka said, it looks like we're heading to that 15%.
Incredible.
One way or the other.
In just one fell swoop, we're there.
Yes.
Incredible.
He was speaking during a briefing. Our correspondent, Sarah, just sensed this. He explains that the urban inflation is at 26.09%, rural inflation 22.15%, and he explains that the general prices of goods and services in the country declined compared to 34.80% in December. So we've gone from 34.8 to
all the
24.
Way,
That's about 10%,
right. Just watch me head into the market buying.
And I just watch you get
that
shocked.
The prices are low.
Exactly. I would just watch you get shocked,
right,
Ladi, because I don't know how much of a reality is captured here that between December and now, January, we have lost 10% in prices. Commodities have lost 10%. Perhaps it's the petrol we're looking at.
Well, I guess at this point, do you feel it in the market? We'll see what February.
I think there's a song like that. I think there's a song like that, Ladi. But really, this is going to make for a lot of conversation in the coming days.
Right.
And remember, we're still talking about the the new methodology used for unemployment, which places unemployment at about 4% at this time in the country, and how much people have ignored that number. Now, if we have this now, and we have on paper that we are hitting the target of 15% in 2025, what are the people feeling? Can the people really quote the numbers from the government?
When you go to the stores and you actually feel that this is actually the inflation rate you're feeling.
Exactly. I think that's the essence of the numbers. So when we have numbers that are just numbers and do not reflect the reality, I mean, it loses kind of credibility.
I'm still going to be tracking this one to see how it plays out.
This is hot news.
We cannot play with inflation numbers, but we'll see. We'll see.
Neither can we play with unemployment numbers, Ladi. Well, anyway, let's not get too selfish. Let's see what's happening in other parts of the world. We start from Ivory Coast now, where strong rains across Ivory Coast central regions are expected to strengthen the cocoa trees and improve growing conditions for the April to September mid-crop. This is according to farmers in that country. And Ivory Coast world top producer of the main ingredient, well, it's chocolates, is in the dry season that runs from mid-November to March when rains are scarce. Farmers had been worried that the hot weather would delay the start of the mid-crop season and tighten bean supply before the country's central regions received above average rains last week. Farmers said that they were now happy because the moisture was expected to help young pods to survive, and they add that another rain was needed before the end of the month to improve the yield of cocoa trees. And leaving Africa now, we go to Australia. The Reserve Bank there, they've cut their benchmark interest rate for the first time in over 4 years. And they're finally joining ranks with other major global central banks as softening inflation allows room for easing policy. The RBA cuts rate by 25 basis points to 4.10%, marking its first easing since November 2020, when the central bank cut its rate to a record low as it battled a slowing economy during the pandemic. The central bank had held its policy rate steady at 4.35% since November 2023, following an extended period of 13 rate hikes to tame inflation. From there, we go to China. Well, an unusual meeting deserves to get on the news. I guess you would agree with me. Chinese President Xi Jinping has delivered a speech at a rare closed-door symposium with prominent entrepreneurs, according to state news outlet. And the president is asking entrepreneurs to show their talent in a new era for the nation's businesses. He adds that China must unify their thinking, strengthen confidence, and promote the healthy and high-quality development of the private economy while downplaying the sector's current financial challenges as temporal, local, and in the process of being reformed. Then we move to France. Something seems to be happening there. We know neighboring Germany, they do have that election coming on this weekend. And in France, they say they're ironing out the 2026 budget of the Eurozone's second largest economy. And the minister there has warned that it's going to be demanding. It's going to be a demanding task, according to the minister, economy minister Eric Lombard. I said after lawmakers earlier this month finally adopted the 2025 financial plan after a spate of tumultuous government toppling attempts. Remember, there was a vote of confidence and no confidence, and all of that happening in that country. And finally, experts are warning of the potentials of the tariff. I guess we cannot have a global news without a tariff these days. They're warning of the impact it could have on Canadian sugar and confectionery companies that to be hit hard if the United States goes ahead with that tariff and comes to play. Mostly it goes to industry sales that could go south of the border. The industry is one of Canada's most vulnerable agri-food sector because more than 80% of its sales are to the United States. Canada and the U.S. are currently in a month-long truce. We know that President Donald Trump suspended that, but we do not know what will happen afterwards, laddie. So it's still fearful for a lot of, even yesterday we spoke to Juliana. UK is not happy about this. They're hoping to get an exemption. Canada sells about 80% of its produce to US. So this is going to largely affect these two countries if this tariff goes on.
Right, and definitely in all of these tariffs, certainly there will be some countries that can take advantage, of what's playing out.
Africa can do that.
So Africa,
but if AGOA is touched, then Africa will feel the impact.
Yeah. So definitely we're looking out for who profits from all of this, and hopefully we put aside all of these tariff wars and get along with 2025.
We'll have to talk to President Donald Trump.
Yeah, we're all still trying to tame inflation globally and locally. All right, thank you so much, Inida, for giving us all the details of what's playing out in the global space. So that's it for this morning. Thank you so much for watching. We'll be back at 1 p.m. with Business Incorporated to tell you what's playing out with all of those markets. Thank you so much for watching. From me and the team right here at Channels HQ's. Bye for now.
Fly better.